Hey everyone, and welcome to This Explainer. I am absolutely thrilled to have you here today. So, if you've ever caught yourself daydreaming about those warm trade winds, the incredible beaches, and just that unique, laid back lifestyle of the Hawaiian Islands, well, you are definitely not alone. But let's be real for a second. The Hawaii housing market can seem incredibly daunting, and frankly, intensely expensive when you're looking at it from the outside. Today, we're going to completely transform that overwhelming feeling into a manageable, realistic, and highly structured plan. And our main priority for this explainer, to show you exactly why running your numbers through a Hawaii-specific mortgage calculator absolutely must be your first step, literally long before you ever attend an open house or even think about calling a real estate agent. I mean, it's the ultimate dream, right? Owning your very own slice of paradise out in Hawaii. But while the vision is beautiful, the financial reality of island real estate is, well, it's tough. Getting a home in Hawaii requires precise, error-free financial planning. Okay, let's dive into this because we're going to bridge the gap between that beautiful dream and the hard numbers that will actually make it happen for you. So here is our roadmap for today. We'll be looking at the cost of paradise, the anatomy of a mortgage, your digital financial guide, navigating loan options, uncovering hidden costs, and finally, your path to pre-approval. All right, Section 1, the cost of paradise, dream versus reality. There is just no getting around it. The islands are incredibly expensive. The real estate market there pretty much plays by its own distinct set of rules. And because of this high price tag, knowing your exact budget is absolutely crucial to avoid money problems down the road. You simply cannot afford to guess here. Precise financial planning isn't just a, good idea. It is a mandatory first step. You really need to understand your financial plans and limitations completely before you even look at a single property. Moving on to Section 2, anatomy of a mortgage, unpacking the scary math. Okay, just look at this formula for a second. M equals P times R times, you get the idea, total alphabet soup. This is the algebraic nightmare that lenders use to figure out your principal and interest. Honestly, unless you're a mathematician, calculating a mortgage manually with this thing is a guaranteed headache. But hey, don't panic. You are not going to have to touch it. Now, what's really interesting about this slide is how it visualizes your monthly payment as a simple pie made of 4 main slices, instead of all that scary algebra. First up is the principal, which is paying off the actual loan itself. Next is the interest, so the cost of borrowing the money. But in Hawaii, those next 2 slices are huge. Property taxes, which are based on local rates, and homeowners insurance to protect against island-specific elements like storms. There's a great quote from our sources that really hits the nail on the head here. It says, "A clear understanding of your loan structure is the foundation of successful long-term home ownership." And this is exactly why we're digging so deeply into these numbers. Understanding how these 4 slices interact is key to actually feeling secure in Hawaii's real estate market. Section 3, your digital financial guide, translating data into clarity. Enter the real hero of our explainer today, the Hawaii Mortgage Calculator. It automates the whole shebang. Step 1, you just input your estimated home price and down payment. Step 2, pick your loan term. Step 3, and remember, this is vital for the islands, add your estimated taxes and insurance. And finally, step 4, you instantly get to view a detailed breakdown of your monthly payment. It's a real game changer. Now, while you're interpreting those results, you'll likely run into the concept of escrow management. This simply means your lender collects funds every month to pay your property taxes and insurance bills on your behalf. Honestly, this setup is fantastic. It helps you pay those taxes and insurance on time without having to stress about massive lump sum bills hitting you all at once. And a good Hawaii mortgage calculator factors this escrow amount right into your monthly payment estimate, so there are 0 surprises. Which brings us to Section 4, navigating loan options, playing with the variables. A top-notch calculator lets you instantly compare different loan structures. Notice here how a fixed-rate mortgage offers a stable rate, which is perfect for predictable long-term budgeting. Contrast that with an adjustable-rate mortgage, or ARM, which usually starts lower but then fluctuates over time, often a better choice for short-term owners. And then for first-time buyers or military members, FHA and VA loans offer highly competitive terms. And this brilliantly illustrates why testing those variables matters so much. Just look at the contrast. A 15-year fixed loan means higher monthly payments right now, but a much, much smaller pile of total interest paid over time. On the flip side, a 30-year term gives you the relief of lower monthly payments today, but you're going to be climbing a much higher mountain of interest over the life of that loan. The calculator lets you check that total interest paid, which, believe me, often completely surprises buyers, and it helps you balance your immediate monthly budget with your long-term wealth goals. Now, you might be wondering, hey, can't I just use any generic calculator I find on the internet? The answer is no, absolutely not. Geographic variations matter immensely. Where you live in Hawaii directly affects your housing costs. For example, Hawaii County has a property tax rate of 0.34%, whereas Maui County is at 0.23%, and Honolulu County varies entirely and requires its own specific assessment. A generic calculator just won't know these local differences. You need a Hawaii-specific tool to account for county taxes so your estimates are actually accurate for the islands. Section 5. Uncovering hidden costs, looking beyond the principal. Because, let's be honest, the sticker price of a home is really just the starting point. When closing the deal, you should expect closing costs to run somewhere between 2% and 5% of your total loan amount. These fees cover things like title insurance, appraisal fees to check the home's value, and government recording charges. And on top of all that, you have to remember ongoing homeowner association, or HOA fees, which are paid directly to the association. You absolutely must factor these separate, sometimes hidden costs into your digital planning budget. You want to avoid any nasty surprises at the closing table, right? Oh, and speaking of costs, we have to talk about a massive misconception, the 20% down payment myth. A lot of people think you are strictly required to put 20% down to buy a home. And while putting 20% down is incredibly beneficial, mostly because it eliminates private mortgage insurance, or PMI, and it lowers your principal, many loans actually allow you to put down just 3% to 5%. That is a huge variable. You can easily test different down payment amounts in your calculator to see exactly how it affects your monthly payment, and then decide whether that PMI cost is worth keeping more cash in your pocket today. Finally, Section 6, Path to Pre-Approval, from digital to real world. Getting officially pre-approved shows sellers that you're serious, and it sets a clear, defined budget. But look closely at the steps here. Step 1 is exactly what we've been talking about this whole time. Estimate your payments with a calculator first. Then step 2, you gather your financial documents like W-2s, pay stubs, and bank statements. Step 3, you review everything with a loan officer to get that official letter. So the crucial point is this. While the calculator is just an estimate and obviously doesn't replace a real lender's advice, it gives you the confidence, the baseline budget, and the right expectations needed to successfully tackle these official steps. It gets you prepared to act fast when you finally find that perfect home. By taking the time to run your numbers through a Hawaii-specific mortgage calculator before you ever start house hunting, you are taking total control of your financial future. You're taking this confusing, overwhelming process and transforming it into an actionable, clear-cut plan. So I'll leave you with this question. Are you ready to calculate your slice of paradise? Go find a reliable calculator, plug in those numbers, and take that powerful first step toward your Hawaiian dream today. Thanks so much for joining me on this explainer, and hey, happy calculating.